You're basically saying that this is the new Bitcoin. You're getting in at a very early stage.
Correct. That's right, because
all hell is breaking loose in crypto markets as Tom Lee predicts Ethereum is about to do what Bitcoin just did. And when Tom Lee speaks, many important people listen.
the financial services industry and crypto are converging. It's important to create a project that essentially accumulates Ethereum. So that's why we're creating this treasury vehicle.
By the way, all of this is happening while Robinhood launches Ethereum and Solana staking for US users, creates an Ethereum Layer 2, also announcing their goal to be bigger in crypto than Coinbase, along with Ethereum just hitting a new record of 1.45 million daily transactions. The last time this happened was in 2021. BlackRock is now pushing for an XRP ETF. BNB Chain's DEX monthly trading volume just hit a record high. Aptos's CEO joins the CFTC. Chainlink launching a suite of products for institutions. Gemini, Robinhood, Kraken, all now listing tokenized stocks. I can't believe how hard Tom Lee is going with this announcement. We just saw something similar with SharpLink, but Tom Lee, Bitmine, and Fundstrat are much bigger fish. The CNBC hosts really push back on him here as he tries to explain what he's doing. They question his reasoning on a lot of things. Make sure you watch the entire video clip and you tell me, is this a good idea? And how could you not be bullish on Ethereum after hearing this? Listen.
This is some big news. It's kind of complicated, but probably suffice to say that you all are doing basically what MicroStrategy did with Ether. You're going to make Ether, the purchases that you buy through this, you're going to set this whole thing up like this. You want to explain a little bit?
Yeah, glad to. I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025 is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that essentially accumulates Ethereum to essentially protect and have some influence on the network. So that's why we're creating this treasury vehicle to buy Ethereum. The more Ethereum that's accumulated, the more secure the network is. And I think it's also sort of the architecture that future banks will have. When Goldman issues a stablecoin and JP Morgan doing it on Ethereum, as a layer 1 blockchain, they're going to want to secure it by staking Ethereum. So we're trying to get in front of that by creating a treasury vehicle.
And just so I understand, it's safer if you own more of it. Explain why that would be.
Well, Ethereum is a proof of stake network.
Right.
So unlike Bitcoin, which is proof of work and miners do all the work for you, and that's why you have decentralized trust, in Ethereum it's important for these entities to essentially validate transactions. So by becoming a staking entity, you're sort of securing the fidelity of stablecoins. So you don't want a stablecoin like USDC or USDT to be on a blockchain that's outside the purview of the U.S. And so I think Ethereum is a high quality, the second largest blockchain network, and it's over 51% of stablecoins, and 30% of all fees on Ethereum are actually stablecoin revenues.
So we even have the Treasury Secretary, Scott Bessent, talking about how stablecoins could be very positive. He likes them, likes to see what's there. But you're basically saying with this, and we've also seen what happened with Circle, the stablecoin issuer,
yes.
Huge run-up after their IPO. So you're basically saying that this is the new Bitcoin. You're getting in at a very early stage.
Correct. That's right. Because let's say stablecoins, which is $250 billion today, gets to Treasury Secretary Bessent's reasonable $2 trillion. That's a 10 times increase in size. By the way, already stablecoins are the 12th largest holder of treasuries. They'll become the number 1 holder by then. U.S. dollar dominance is 27% in GDP terms. It's 57% of central bank reserves. It's 80% of financial trading transactions. It's 100% of stablecoin denomination. So by getting to $2 trillion, you're ensuring dollar dominance. This is very good for the U.S., but $2 trillion of stablecoins is a lot of network fees for Ethereum.
So Bitmine Immersion, what you're doing is a $250 million private placement, which is all going to be put into
Yes.
Ether?
That's right. We created a carefully curated list of investors to bet on this. If you look at the press release, it is the blue chip, both in the financial world and in the crypto world. We have
Founders Fund, Kraken, Galaxy Digital.
Yep, Pantera. Yeah, so these are in the crypto world, and these are like sort of the blue chip crypto entities. And of course, Founders Fund is legendary in the traditional financial world.
And how do you measure this? It's just based on exactly how Ethereum is trading? Or?
Well, yeah, the strategy of the company is going to be based on how much Ethereum is held per share.
Okay.
And as of today, it's $4. And the company, as we explained in the press release, can increase its holdings of ETH by, getting yield from Ethereum, doing financing transactions at a premium to their holdings, and of course, if Ethereum goes up. So I think there's three ways that value per ETH actually grows.
Look, Bitcoin's price just hit its highest monthly close in history. Bitcoin on exchanges sinks to its lowest level since 2018. Look, guys, Bitcoin's going to be worth a lot more in the future. I hope you have enough Bitcoin. I mean, just look at what's happening with public companies. 20 companies increased their Bitcoin treasury today. Hundreds of companies are now doing this. What Michael Saylor started is now happening in the hundreds.
Companies are racing to get into the Bitcoin 100. Used to be, we thought, oh, it'd be great. There's 10 Bitcoin companies and 20. Now there's 100. Now there's more than 100. Now we're all going to compete to move up the leaderboard. Yeah, let the games begin.
In 2024, the big catalyst in Bitcoin was the ETF Wall Street story. Today, there's so much more. But even if it was just the ETF story, there's no reason Bitcoin couldn't get to hundreds of thousands of dollars with the ETFs alone. We're going to see Bitcoin at such a higher price in the future, you must be patient. My name is Aaron at Altcoin Daily. Make sure you subscribe. We prepared you for this. We told you now is the time. And what we're seeing happen in crypto markets today is something that we have prepared for on this channel. So subscribe, watch regularly. We keep you in tune with everything going in the market. We give you an edge in crypto. I'll see you tomorrow.
If you believe in passive investing, which I think most advisors do these days, and portfolio diversification, then you would argue that you want to basically own the market. That's why you're buying the S&P 500.
This is now part of the market.
Crypto represents 3% of the market. So if you own zero, you're essentially shorting the market.
3% of all the wealth in the world?
3% of the U.S. wealth
is in crypto.
Yeah, if you add up stocks and bonds and real estate and gold and et cetera, you would discover that there's about $111 trillion worth of wealth in America. And the crypto market is $3 trillion. That's roughly 3% of the total marketplace.
Okay, so what's interesting is that's how it flips. So originally it was, originally it was more like, I choose to make no decision on Bitcoin. I'm just not involved.
Right.
Now, if you have no crypto exposure and don't offer it, at least as an option to clients, your point is you are making an active decision now. Or now you're not just saying, I'll leave it up to the client. Now you're actually actively deciding as a fiduciary, I don't invest in crypto. And you might end up being right for some period of time, but it's active. It's no longer a hands-off thing.